There are lots of things that expatriates need to think about when it comes to employment-related income, from where you should be paying your taxes, employment-related equity, or kind of any trailing income that you might receive maybe after you leave the UK. So when we're thinking about employment income and expatriates, the first thing that we might think about is to which country is that income sourced. And the reason that it's important to know where the income is sourced to is because it's going to tell you who's going to want to tax that income and who's going to have the primary right to tax that income. For example, if you were living in the UK and working in the UK and your employer is based in the UK, you would probably quite clearly say, I am working in the UK and the UK is going to tax that income. Similarly, if you went to Spain and you had a Spanish employer and you were working from Spain, you would hopefully quite clearly see that that income would be taxable in Spain. But what if you were living in Spain and your employer was based in the UK? Who gets the right to tax that income? And the answer is, it depends on where you are working from. That is where the income is considered sourced to. So if your employer said, actually for 2 days a week, we need you back in the UK, the remainder of the time you would be working from Spain, then 2/5 of your income would be taxable primarily in the UK and 3/5 would be taxable primarily in Spain. So that's the first thing that we probably want to think about in terms of your employment income. The other thing that we need to think about, or we sometimes come across with some of our clients, is employment-related equity. And what happens with that when you have a period when you are UK tax resident and a period when you're non-resident. If you're receiving kind of employment-related equity, whether that be options, whether it be RSUs, it's usually HMRC unapproved shares, then usually what will happen is they get granted to you, and then a period down the line they then vest, and that's known as the vesting period. What we look at in the UK is where were you during the vesting period of those shares. So say for example you have a 3-year window during which you earn some RSUs, you were in the UK for 1 year of those 3 years, you were outside of the UK for 2 years, only 1/3 of the value of those shares would be considered to be taxable in the UK. Depending on how your employer has taxed it at source, they may or may not have taxed all of it, they may or may not have taxed any of it, but effectively it's your obligation to get your tax affairs right through your tax return. That's something that we do for a lot of people, especially during the pandemic when people left the UK and broke residence before their employers realised that they had. So make sure that you're paying tax in the right jurisdiction. The final thing that you might want to be thinking about if you are leaving the UK and remaining with your employer, especially if you're remaining, for example, with a UK employer and leaving the UK and remaining with them. Normally what will happen is you break residence and your general earnings from that date on would be subject to tax in the country in which you are working. However, for example, you may find that you leave the country in September, but in December you receive a bonus for the calendar year. Similar to employment-related equity, that bonus will have an earnings period and effectively you would need to undertake some apportionment. So even if you received that bonus after you left the UK, if it had been earned in part in the UK, there would be some remaining UK taxation. In terms of employment income, things can get really complicated. So if you end up in a situation where you're not sure whether you're doing the right thing, then please do let us know and we'll see what we can do to help.